Hello everyone, it's Friday, October 24. Today we're analyzing the charts of the euro and British pound to identify potential market trends. Yesterday the euro declined but failed to hit a new one-week low as the US dollar's rally paused. The greenback's bullish momentum was limited by the Federal Reserve's increasingly dovish stance, which eventually contributed to a rebound in both the euro and the British pound. However, the pound was less resilient and is currently trading near its recent one-week low. On the macroeconomic calendar today are key data points, particularly the US Consumer Price Index for September. Despite the ongoing government shutdown, the second longest in US history, the report is expected to be published. This data will play a crucial role in shaping the Fed's policy decision and its upcoming meeting scheduled for next Wednesday. As such, today's inflation data is expected to dominate market sentiment. Consensus forecast suggests that US CPI rose by 0.4% month-over-month in September, with the core figure increasing by 0.3%. On an annual basis, both the headline and core inflation are projected at 3.1%. If the data reflects easing price pressures, it would likely reinforce market expectations for a more accommodative Fed. While a 50 basis point rate cut is unlikely, a 25 basis point reduction looks quite plausible, potentially followed by another cut before year-end. In such a case, the dollar would come under strong selling pressure, offering room for appreciation in the euro and the British pound. Conversely, if inflation prints stronger than forecast, supporting the narrative of persistent price growth, demand for the dollar could strengthen given ongoing global macro uncertainty, particularly trade tensions between the United States and China, as well as continued sanctions on Russia. These factors could bolster the dollar and weigh on risk-sensitive assets. It is also worth keeping an eye on today's US manufacturing and services PMI data for October. Both indices are expected to slip marginally, though they remain above the key 50 mark, indicating continued expansion in economic activity. Meanwhile, business activity figures from the UK and the Eurozone are anticipated to be less encouraging. The Eurozone's manufacturing PMI is projected to stay below 50 points, signaling counteraction in the sector. The services PMI, while slightly above the threshold at a forecast 51.4, may help offset the weak manufacturing print. In the UK, the manufacturing PMI is expected to come in at 46.9, while the services PMI is projected at 51.4, up from 50.8 in September. If these figures disappoint, the British pound could come under renewed pressure. Therefore, it is advisable to closely monitor the release of these statistics during the European trading session. Turning to technical analysis, the 1-hour EUR/USD chart suggests that a false breakout at 15.79 or 15.45 could generate a buy signal, potentially pushing the euro higher. If the Eurozone data comes in stronger than expected, long positions could be considered on the rebound from the 15.20 level with a target of 20-25 pips. On the downside, short positions may become relevant at 16.21 or 16.49 in the event of a false breakout, particularly if the euro area business activity data underperforms. A rebound from 16.75 could also serve as a solid short entry point, targeting an intraday correction of 20-25 pips. As for the British pound, a recent false breakout at 33.13 has already led to an upward move of approximately 15 pips. If upcoming UK data, especially in the services sector, disappoints, the pound could break back below 33.13 and hold below this level, triggering a sell signal. Such a move may drive the pair down to 32.82 and potentially extend to decline to 32.48. At this level, long positions on a rebound could be considered with a target of 30-35 pips. Long entries at 33.13 and 32.82 would only be valid in case of a false breakout. If UK data surprises to the upside, sterling will likely aim for 33 34.49. A false breakout at this level could offer a short entry opportunity. Alternatively, short positions could also be considered at 1.3384 following a false breakout or from the 34.16 area on rebound. However, a move to 34.16 and potentially 34.40 would only be possible if US inflation data shows a significant decline. Best of luck to everyone and enjoy your weekend.